What is going on, everybody? Let me get my goods up. There we are. What's happening, everybody? Happy Thursday. We've made it. We've made it to Thursday. We've got PPI coming out today. Let's get up the good old calendar over here, guys. If you would, please like, share, subscribe. Help me get to a few more likes. Let's see, what did we end the day at yesterday? Did we get close? I know the goal was 20, so let me see what we had. I don't even know. 17. Oh, we got close, ladies and gentlemen. Help me out today. Let's get to 20, and then we can check that off the bucket list and go chase something a little higher. So please like, please like, please like. That's your entry fee into my show. Just simply hitting the like button. Is that fair enough? That's a pretty cheap entry fee, would you say? I'm gonna pull off my jacket because it's getting warm out here. Guys, as always, let me know what you got. If you got any specific tickers you're looking at. And let's see. Let's get today's calendar up here real quick. Apply. And Thursday, where are we at? Today's Thursday, right? Where is my report? Let me double check. Today is PPI day, right? Let's see, let's go this week. Let's go today. Let's go apply settings. And all, and apply filter. Yeah, PPI, that's what I thought. That's what I thought. The core PPI month over month, and then the regular headline PPI month over month. So why am I not seeing it here on my goodies? Give me 1 second, guys. Make sure this is all working. Apply, refresh. Today, PPI. Oh, that's why. I always forget we got this red separator line between data that has already been called and data that's still to come. So here we go, guys. There's our PPI data right there. Got also our weekly jobless claims numbers coming up. And Fed Barkin is going to bark out a speech a little bit after, about 10 minutes after. A lip flapping session from the Fed board. So going to be interesting to kind of dig into that later and see what he's got to say. If I hear anything of major relevance, I'll obviously let you guys know about that whenever we're back live tomorrow. So in that case, what I need to do is get you guys set up with the dollar-based assets over here. We'll go open up another trading view, and this time I'm going to select my U.S. pairs. That way we get the quadrant of 8 up here, or the, what would you call that? Octadrent? If it's a quadrant for 4, well, what would 8 be? Octadrent? I don't know. Just trying to create words here off the top of my head. All right, we'll have it on the 5-minute chart. That comes out in 10 minutes, so we'll see what that has to show for us today. I'll have it up over here. Okay. Top setups, things that I'm looking at. Let's go get my notes up over here, just so I can see if anything major happened overnight. The VIX, by the way, let's go have a look at the VIX, guys. That's the first thing on my notes. Volatility index. This thing has gotten down to pre-war levels, and as of yesterday, we had actually dropped all the way to the yearly lows. Let me go to a daily chart. There we go. So start of the war, this was that first gap up that we had when we came into Monday after that Saturday bombing started, after they killed Khamenei and started 900 attacks over that weekend, or at least that Saturday. I don't know if that was 900 just that one day or between Saturday, Sunday, but nevertheless, a shitload of attacks. I'll just put it to you that way. Okay, that was this gap up, big ugly red candle right here, and then you can see how far it went. We got all the way to 35, over 35 at one point, and stayed quite elevated over that start for a while. And then we started to slowly dissipate and drift downwards as far as the fear gauge goes when it comes to the ceasefire, the on again, off again ceasefire rather. But the markets remained resilient through all this, guys. Through all of this picture here, May, June, July, the stock markets were still climbing and climbing. We had a lot of good earnings come out for technology and AI and things of that nature. A little bit of rotation that happened over there at one point. And yeah, as of yesterday, we got all the way down. Did we touch that? We did. We touched the low from the pre-war, or no, the 2026 low. I'm sorry. Touched the 2026 low. So this right here was the 2026 low when we got all the way down to that 1430 at one point. This right here is the December 2025 low, which was also the 2025 low. And then dropping any further than that 2025 candle, then we start bouncing into December of 2024 prices, or I should say levels, not really prices over here. But when I zoom all the way out, guys, basically when it comes to the fear gauge, we're all the way at the bottom. So it's just interesting to see how, despite being technically still in a war here, even though it's a little bit of a ceasefire, and we still got the blockade going, we got all the cussing and discussing between the leaders of the countries about the final document and the opening the Strait of Hormuz and all that. We're all the way at the bottom. So basically, the traders out there, the investors, have kind of turned a blind eye to this of late and said, screw it. We're going to invest anyway. That's why we've seen everything flying upwards. So is this irrational exuberance? What do you guys think? Be interested to get your thoughts on that as you guys pop on the chat. So let me know. Let me know you're in. Say hello. If you're newer, let me know where you're from, which country, where you're reporting from. It's always good to know where my people are from, my viewers, just so I can dig a little deeper sometimes, perhaps into their own economies at some point. That's something I'd like to do to kind of help you understand that. So, but anyway, yeah, VIX is definitely pretty low. We did have that soft CPI reaction. Well, we had the CPI reaction yesterday. Everything nailed expectations on the dot yesterday, and that's now 2 reports in a row that the CPI had a decline. Okay, remember, we go back to the data itself. I go over here to economic data, we go to inflation, we go to CPI, it defaults to the US dollar. So that June meeting that we had, that June release, which was May's data, that was the last big upward spike we had that crossed the 4% line. And then we come into July where was reported the June data. Okay, remember, this is always kind of a month behind as far as the data. We dropped 0.7% all the way to 3.5. And then yesterday for August, this August report, which was releasing the July data, so keep that in mind, we dropped 1% further, or I should say 0.1% further, down to 3.4. And that's what the expectation was for the headline year over year consumer price index. And again, all 3 of those other CPI reports, the core, the headline for the month over month, the year over year, those all nailed expectations as well. So juicy nothing burger, I think I referred to it as, but we did get liquidity sweeps on either side whenever that stuff came out. So let's see here. And yesterday was the 12th, so let's just go all the way back. Yeah, back in here, guys, this is the Dixie. This is where that release came out. Basically on this candle here, had that big sweep up, big sweep down. I say big, it wasn't really that big, but nevertheless, we had a sweep up, sweep down, and then we had yet another sweep to the upside. And that's kind of where we stand. So nothing too crazy on this. I mean, just kind of your typical earthquake telemetry moves whenever we get releases. The dollar did end up gaining a little bit of overall strength after that move, but not a ton. It's not like this thing flew 40, 50, 60 pips and stayed there. Now, dollar yen had quite the spike. I mean, it had about a 50 pip range whenever the news came out. But yeah, nothing has gotten too crazy. Again, when you meet expectations like that, especially when you do it on 4 reports in a row, it's just a little bit of that volatility in and around the area for a while, and then at some point it just kind of dissipates. But that's 1 out of 3 inflation pictures down for the month. So again, we do have the PPI data coming out today. And if we take a look at a little bit of the history, this thing spiked just like CPI did, all the way up to 6.5% at one point before the July reading came out for June's data at 5.5%. So that was a whole 1% drop. So, just like we saw a little tiny bit of an overall decline yesterday, are we going to get the same today, or we're going to drop to 540, 530? We'll just have to see. We'll see in about 2.5 minutes. So that's that. And then at the end of the month, okay, the PCE data, that's really the final one. We did get just a little bit of a decline again for the month of July for June's data. So the PCE gauge didn't really get too crazy and erratic like CPI and PPI did. It still raised, it still rose up some, but not like these other reports. So again, we're just waiting on PPI data. That'll be out here shortly. Take a quick look before I move to the charts, since that data is about to come out, to the U.S. economic heat map. And when we did get that report yesterday for CPI, we had a bearish box on here the first time. So since we hit the expectation on the dot, it dropped from bearish to neutral, or I should say rose from bearish to neutral. So we went from a 27% beat rate yesterday morning to 30%. So overall, the economic data for the dollar is still quite low. We still overall are missing quite a few expectations. Anything under 40% to me is a fundamental reason to start looking to sell that asset. And we're clearly at 30, so that's where we stand. That's why we have pound dollar, euro dollar, Kiwi dollar, what am I forgetting? Aussie dollar, dollar CAD, and dollar Swiss to a point on the dollar sell top setups list. Okay. Excuse me. Get my voice rolling this morning. Oh, unless I lost my water. Oh well. I've got my energy drink. I'll turn some cartwheels with you guys. So guys, let me know if you're here. Give me a holla. I see 11 watching. If you don't mind, please like, share, subscribe, and say in the chat what you're watching. Tell me what you're looking at today. I got 4 likes. All right. The math isn't there, guys. There's 13 watching. I got 4 likes. Come on, 1 like is your entry fee. All right, guys. But yeah, just anytime in the chat, if you got a tick or anything you want me to check out, go ahead and feel free to pop that in. So, okay, the data is just about set to come in. I'm going to put this back on a 5-minute chart just so we can get that instant look. And then we'll continue with some main assets and catalysts right after. Let's get this report over here pulled up, filter out low, medium. We're just going to go for today only. Apply. And remember, the chart will tell us what is happening before the economic calendar even updates. That's just the way it works. And we're already getting, Dixie is starting to move a tiny bit. Remember, the dollar quote pairs are at the top. So a push up means dollar weakness. The dollar base currency pairs are on the bottom left 3. So a drop means dollar weakness. And then the Dixie over here on the right. So far, we're getting just a little bit of a spike down. Let me see over here on my other computer if I can get the numbers refreshed and see what we're got. Why does it keep doing that? All right, PPI. So jobless claims came out a little bit warm, so that's a bearish look for the dollar. The core PPI, the month over month, did come in 0.1% lower, and the main headline PPI month over month came in cooler as well. So there you go. 0% against a 0.2% forecast. So overall, this is dollar weakness, guys. Excuse me. Overall, this is dollar weakness when it comes to the economic heat map for the U.S. dollar. We'll get the numbers pulled up on the screen here for you shortly. But yeah, remember the dollar is just overall pretty weak. I mean, it got propped up geopolitically for a while because of the Middle East situation. And it wasn't even paying that much attention to the negative data that we had. So yes, it is bearish data. That doesn't necessarily mean the dollar is going to drop right away. We're likely going to see, like we saw yesterday, just a little bit of sweeps to the upside, to the downside. And then at some point, it'll pick a trend a little bit later on. So dollar yen's only up a modest 4 pips as we speak. That's a very tiny amount. That's after a 10 pip drop, looks like. About an 8 pip drop, I guess it would have been, down to the 159.26. So what we got over here, Aussie dollar, that's not really moved a ton either, 8-9 pips. So guys, so far this isn't that big a deal. A lot of times these reports, if it's something that's substantial, it's going to pop 20, 30, 40, 50 pips right away. And so far we're still within that 10 pip range, and it's already 2 minutes after the release. So this is likely just going to be another one of those juicy nothing burgers as well. But when I say that, that doesn't mean that it's safe to necessarily go out and smash your buy button or your sell button, depending on what your bias is on any of these pairs. It's just to simply mean we could definitely get some wicks up and wicks down, just like we did yesterday for the consumer price index. So that's it. So that's now 2 out of 3 inflation reports for the month, and they've been cooler. Okay, so that's a good thing. The PPI, that's what the producers have to, that's the increase or decrease in amount of money they have to spend on their raw materials and items to create their goods and services that they sell to customers, right? So anytime you get cooling inflation, like this technically is, for their sake, then that means that there's likely not going to be any major price increases whenever they send those items to the customers to buy. So again, core PPI, we'll just go ahead and go to the calendar, update that for you so you can see for yourselves here. Let's just go filter out the medium and just stick with the red. All right, here we go. So PPI. So again, it was an increase. Okay, previous was of minus 0.3, but they had forecasted it to go up by 0.5%, but it only went up 0.3%. Right. So yes, technically it does incline as far as the headline number, but the forecast was to go higher. So that's a surprise of 0.2% to the downside. So that's, again, guys, when we see these numbers, we have to always look at it from that lens. It's not just saying, well, we raised 0.3%. That's not the way to look at it. The way to look at it is it did not raise as high as was priced in, as what the economists had projected with all their math and their algorithms and their whatever kind of math, trigonometry. I don't even know what kind of math they use. I'm not a big math person, guys. Give me some simple math. Give me the old math, by the way. You guys have probably seen this new math out there where you got to write like a novel just to find a simple answer to stuff. I don't understand it. I know how they do it and I know why they do it. Like, I understand the formula for why they do it. And it makes sense the way they do it. If you're wanting to do it that way in your head, it makes sense. But as far as writing it out on paper, you're using extra pencils, extra pencils, extra pen, extra paper, just wasting more resources. I just think it's silly. Can I get an amen on that? Is anybody an old mather out there like me? The new math is just extra work. I think it's nonsense. But hey, that's my opinion. Guys are welcome to chastise me on that if you think the new math is better, but I don't get it. I just don't understand it. So anyway, let's go. I want to filter something in real quick here. So again, the jobless claims number, that was a 209,000 actual number against the 202,000 forecast. So it was also higher than the previous. So that's 10,000 more jobless claims this week than last week. And it was higher, most importantly, a surprise of 7,000 jobs, right? Again, the forecast was 202,000, the actual 209,000. So that's a 7,000 surprise. Again, the core PPI was a drop as well. That was a medium impact. So the headline number missed by 0.2%. The core number missed by 0.1%. So all this is giving us a bearish look to the dollar. The dollar will actually have a percentage change on this because of the jobless claims, because I do believe the previous number was a bullish number. Yeah. So this box is going to change. This is going to drop from a bullish down to a bearish box. Okay, since we had 209,000. And our percentages down here, I think will change to like 25% if I'm doing my math right. Remember, I'm not a math person, but 30% beat rate down to a 25% beat rate. It just goes to show you how dynamic this list is. Okay, every single time we have a US data print come out, it's going to do that. So there you go. There's your big fat doji candle on a 5-minute chart, guys, that we're starting to see on all these major currency pairs. Doji candle, where the report came out, doji, doji, doji. Guys, this happens all the time, especially on items that have a report that meets expectations, like we did yesterday as an example. So anyway, nothing too crazy though. So far, it's just a little bit of a nothing burger. We're still basically back where we started, guys. Only a few pips difference from the pre-release point. And we're now 7 minutes in. So we'll come back to this later. I don't see anything too crazy happening on it as we speak. And yeah, That is your PPI data set for the month. 2 out of 3 done. The next one we have is going to be at the end of the month when we have PCE. Okay, again, this is the Fed's favorite gauge. So we have a neutral reading, we have a bearish reading. Okay? And oftentimes that will kind of be your preview of what to expect when the PCE comes out later in the month. It's not to say it's 100%, but in general, as the CPI, PPI goes, so does the PCE. Okay, so that's a good picture. That's a very good picture for us here in the States as far as inflation goes. Right? We like to save some of our money. We don't want to spend, just like any of you guys, when your own CPI and inflation gauges come out in your own respective countries, don't want to see that. Why am I fuzzy? Let me go fix my fuzz factor on my shoulder. Let me see if I can fix this for you guys. Sometimes it is the hardest thing to do to get this thing to where it doesn't give me fuzzies. Ah, there we go. I got rid of the fuzzies. My shoulder's not on fire anymore. Yeah, I use chroma key setting to because of my green screen in the back, and sometimes the little pixel things get out of whack, and I got to go adjust the numbers. Okay, so 435 down to 422. All right, we'll stick with that since my shoulder looks better. Good morning, Vince S4V. How are you doing? Where are you from? Please like, share, subscribe if you guys have not already. Help me grow this algorithm. That way I can get this out to more and more people. Again, I'm here to simply help you guys get 1% better every day. I don't want to overwhelm anybody because it's very easy to get burnt out in this industry, and especially if you're trying to learn 47 things all at once, right? There's a lot more than 47, by the way, but I'm just saying. Just work on one little thing a day. That's why I like to show a lot of strategy on the charts, guys, because once you get the strategy down, regardless of what your strategy is, okay, your trading strategy, well, that makes it a lot simpler to just glance at a chart and see your levels, because the real mind work, in my opinion, is done with the fundamental analysis, understanding the way the economic calendar items move in kind of synergistically with each other, like we just said with the inflation readings, right? CPI to PPI to PCE and kind of the relationship they have. And then obviously seeing what the smart money is doing versus the dumb money and making sure they're at opposite ends, but the smart money is on your side according to your fundamental analysis and especially this year, geopolitical drivers, okay? All the nonsense that's going on in the Middle East or whatever the case. That has a big giant bearing on how we should be trading, whether we like it or not. In a perfect world, in a time where there's no conflicts or no wars, we can focus primarily on the data, on the economic calendar data, because when you watch CNBC, you watch Bloomberg, you watch any other legacy financial media out there, they're not talking about a 5-minute chart. They're not talking about necessarily a moving average crossover on a 15-minute chart, right? They're talking about the data, the inflation gauges, the interest rate hikes or declines or unchanged numbers, right? They're talking, again, inflation today, they'll be on there. If you guys go on to any of those legacy financial media channels, today they'll be talking about PPI. They're going to be talking about yesterday's CPI, and they're going to be previewing the PCE at the end of the month so they can get a complete picture of the inflation, because that has a big bearing on whether or not we hike or drop interest rates, which raises dollar, which moves gold all over the place, and so on and so forth. All the markets, one big, gigantic, worldwide geopolitical puzzle that all fits together in some way, shape, or form. So if you're only a trader of the euro dollar or the dollar yen, it's important to understand how it fits in when it comes to the dollar index, when it comes to gold, when it comes to interest rates, okay, when it comes to anything. And that again is why I say I like to spend a lot of time on the charts and strategy. That way this becomes second nature, so your brain power can start going to the stuff that really matters, the hard data. Does that make sense? Let me know if that makes sense to you guys. Yeah, let's go look at some assets, Vince. You're asking about gold. I think we get a huge consolidation area because the dollar is very strong and the yields are much higher because of the war. Yeah. Let's go look at that. So, speaking of the dollar, I happen to be right here on it. So the way I see the dollar, I know you mentioned the dollar being strong. I feel like it could. I feel like it's in a spot where it could go up. It has given us a retracement. Let me just do this. I want to go over here and select my currencies. So with the dollar, let's talk about that for a second. Okay, you say the dollar is strong. So the way I see the dollar is a couple things. Number one, the month of July was not kind at all to the dollar, at all, the economic calendar. Okay, if we go back here, July 30th, we missed our GDP numbers. August 5th, just last week, we had a miss on our services sector for our purchasing managers index. Okay, a big miss there. July 15th. Well, actually, let's see here. Yeah, July 15th and today, we had the bearish PPI number, which is good for our pocketbooks, but it's not as good for the currency, at least right now. Wage growth, we had a bearish look on that on August 7th. JOLTS, ADP, non-farm, all of those this month, we've had bearish readings. We've had misses on our jobs numbers. So when you say the dollar is strong, if you look at the fundamentals, the data doesn't lie. The data is saying the dollar is not that strong. Now, obviously, it's being propped up to a point because of the geopolitics of the world. Obviously, the Middle East situation. Are we in a ceasefire? Are we not in a ceasefire? The blockade, the list of demands Iran has that the U.S. is absolutely not budging on for getting towards that peace deal. The list of demands that the U.S. has that Iran is saying that they're absolutely not going to budge on. So there's a lot of uncertainty out there. If they spark up some more bombs and fights, yeah, absolutely agree. Dollar's going up. So, but when I just think of it from a fundamental perspective at first, July 1st, the dollar was a very strong currency out there because we had basically everything beating expectations on this page. But if you go look at every one of those bearish items, except for a couple from this month, they were all in the month of July, just not so good. Again, the jobs numbers went backwards. Excuse me. July was a good month for inflation, which of course has the opposite effect for the dollar. Dollar was going down because of the inflation. And then not to mention, again, some of your growth factors, the growth numbers themselves, the GDP, and then the services PMI. So there's just a lot of data, hard data, that's kind of saying the opposite, that it's a little on the weaker side. But again, data is data until you get to geopolitics, and that's why the dollar is being propped up right now. If we get a peace deal actually signed, you'll see the dollar likely start dropping even further because oil will come down, rates, everything else. So yeah, but then when you go look at it on a technical level on the chart, yeah, it's definitely been giving us higher highs, higher lows on a daily. We are definitely in a daily demand as we speak. We've been kind of fluttering around in it for the last week and a half, talking about this daily demand right here, where we had a consolidation. We had a really strong expanded range candle leg out that left a pretty strong gap. And not only that, but you had a little bit of a form of resistance that became support. You run that forward, and those are the two items on a technical level that are keeping the dollar propped up, in my opinion. Okay, so forget fundamentals for a second and forget sentiment for a second. On a technical level, this is what's keeping us propped up. Again, and the 200 EMA just so happens to be going through the bottom of that real body right through here. Okay, so that's another item on the downside, another support item that's keeping us propped up. I drew this yellow line here as a projection tool to say, hey, if we get a break and close below the support resistance, below the supply, then I would be looking for a retracement back up on some of these currency pairs for a place to short the dollar. So it's not there yet. So I'm right there with you. Right now on a technical level, it's definitely looking pretty good. Those are great items, great odds enhancers that we just want to stack together to try to form a picture of a possible push up. So definitely agree with you on the technical level, but the data screams otherwise. Does that make sense? So that's the dollar. And because all the data has been missing for the dollar, that's done what for gold? For gold, it's had the opposite effect. Misses on economic calendar data for the dollar typically have the opposite effect for gold, strengthen it. So fundamentally speaking, gold is looking pretty strong. Gold's obviously been giving us quite the spike up of late. If we go over to gold, you can see right here, everybody in the world has seen this from last Wednesday's August 5th candle. We've just been going up and up. Now, just like the dollar has dropped into demand, gold has actually bounced up into overhead what? Supply. It's bounced into some resistance. Okay? Bounced into resistance. So kind of a similar situation to dollar. If we can break and close above, well, I'll be definitely interested in some buys here. Like here's my projection. If we can break and close above the distal line of that supply of that overhead supply zone, and then retrace, well, then I'll be interested in some type of buys on gold. Okay. Yeah, that's probably going to be the play. That's going to be the safest play because that's proving that we've got. If it breaks through that overhead supply, well, that proves that we've got some underlying strength somewhere in this leg because it's basically a new impulse leg, bullish impulse leg to the upside. So this is a daily chart. Drop down to the 4-hour. There is a zone here. I talked about this quite lengthy yesterday. This is a 4-hour zone right here, but there just wasn't really a whole lot of volume. So I'm really not that interested in this zone here for buys. Okay, remember demand zone, supply zone. That's where you get a momentary consolidation. You've got buyers and sellers duking it out. And at some point, if you get a strong enough push away, which gives us our leg out, if you have volume behind it, well, then you've got some institutional looks there. You've got smart money piling into the system for that because they have way more money than you or I sitting here on our laptop or our smartphone. So with them pumping a lot of money in the system, they've got the ability to push price away quite nicely. If you're seeing a move like this where we have a lot of nice movement away, but there's no volume there to back it up, that's more of a false move in my opinion. It's not really backed by anything major. Effort did not match result. Wyckoff 101, right? So because of that, I just don't like this demand zone right here. This one down here, though, I like. It just so happens to be down on a 2-hour time frame because we are starting to get a above average volume. That's that yellow candle on my VSA chart. Remember, green is average volume, blue is below average. I don't care about any of that. All I care about is yellow or red. My leg out candle was yellow. The other candle, the second leg out candle was red. So this is smart money really giving this price a yank to the top. So I like the basing on this because of that. So that's why that's my alert that I kind of drew up a little bit of a picture of yesterday. Okay. But I would honestly prefer on gold, once again, that we get that break and close above the rest of this supply first, above the rest of that, to prove that we got some underlying strength in these moves down here in these zones. So that's kind of my look on gold. Nothing's really changed really in the last couple of weeks. I've been bullish gold for a while, just didn't really have a place to enter. P still, yeah, let's see what else you wrote here. Yeah, that makes sense. In fact, we get a P still, dollar will fall maybe to the high 80s. And yep, that's right. People will start to talk about rate cut. Exactly. Yeah, before yesterday's inflation reading came out, the CPI, we were sitting at 54% chance of remaining unchanged for our rates in September. After the report release, we climbed to like 62% chance of remaining the same, right? So let me see. Let's go find this Fed Watch tool real quick here. I haven't even updated and looked at it today. Okay, so look at that. So we're even higher now. Even higher. So 54% chance yesterday that we were going to keep rates the same. And there was a 40, what was the math on that? 46% chance that we were going to raise 25 basis points. We went from 54 to 62 at one point I saw. This dropped from 46 all the way down to like 40. And now today, we're all the way up to 68%, we'll call it, chance of remaining the same. and now we're down to 32%. So now we're just down to a 1 in 3 chance of getting that 25-point hike, whereas yesterday morning we were at 1 to 2, or well, 50-50, a coin flip, right? Almost a 50-50, close enough. So yeah, so far the inflation's good. I mean, again, if we go back to the data screen over here, let's see, let's go to let's go back to the CPI. So again, yesterday's CPI. So July and August, we had declines in inflation for the headline number. This is the year-over-year number. That's the important thing to keep in mind here, guys. The year-over-year number, 3.5 down to 3.4. Now today, and it's not updated yet, but this will update a little bit lower as well. So yeah, that's what the bonds market's looking at, right? Bond market over here. And then again, we'll get the PCE at the end of the month to give us the final PCE number before September's meeting. And then as far as the month of September, we'll have another CPI and another PPI that come out just before the rate statement on September 16th. Okay. So we still got 1, 2, 3 inflation readings to come out before that time, now that we've gotten today's PPI out. So good stuff. But yeah, as far as gold goes, yeah, that's basically my play. Really the two options, right? Nothing's really changed over here. Do you stream every day? I like how you look at commodities at technical level. Yeah, I do, Vince. I'm typically on, for the most part, if you think of New York time, I'm here in Kansas City. So I'm 1 hour behind New York City, 1 hour behind the EST time. So if you guys, it's probably just easier to go by EST, but in general, I usually stream at either 8:15 or 8:30 Eastern time. Once in a while, when we get some 10 o'clock US data, then I'll stream a little later just so I can cover that data with the charts, give you guys some live looks. Okay. So basically the simplest thing to do is to just go to follow our calendar over here. If you're looking out ahead of time, right, you can just go, just kind of pull up your monthly calendar. And as far as our calendar, just go to FXEmpire.com. And then up here, you can just type on, it'll say economic calendar, but pull it up, put on your red folder events, just kind of filter out the medium. And for the US data, that's basically the times I'm, that we're focused on. So basically whatever the red folders are showing you right here. Again, that's FXEmpire.com, economic calendar in the tab. Just throw on just the US data, and you can look out a month in advance. So like I put in the custom and I just selected the whole month. This will give you a good idea of when I stream. Now, once in a while, some things may be a little different. Like I don't put a whole lot of emphasis, to be honest with you, on like housing permits, things like that. Like we had a 9 o'clock existing home sales number the other day. Yeah, stuff that are important, but I just don't really see a lot of movements, a lot of market movements. Some of the flash numbers as well. Okay, it's data that they say is more important than the final number, but the reality is they're lower impact events for a reason, because they don't often move markets very many pips at all compared to the finals at times. So yeah, just that's the easiest thing to do. But as far as the actual times themselves, if you just go to our YouTube channel and just click here on the live button where you're already in, each day will show on the thumbnail the time that I'm set up for. So yeah, good stuff. Good stuff, guys. Oh, my new podcast that I recorded on Friday got released. By the way, guys, this is my buddy Alan. Let me see here. I'm trying to go view full podcast. There we go. I recorded this on Friday. They got this released yesterday. This is Alan. This is another guy I stream with on another channel, A1 Trading. Okay, so go check that podcast out if you haven't already. He spent some time at JP Morgan, and now he does it all on his own at the house and does some projects with A1 as well. Really cool guy, awesome dude, very down to earth, and it was very much a pleasure to interview him. So yeah, that's the recent podcast. Go check it out. And we'll get back to the charts, guys. I wanted to go through, I had a couple notes here. I wanted to finish up my notes. Let me go pull my notes back up. Yeah, Dixie near a 2-week high, around that 100 level. Yields easing a bit. Makes sense. Inflation has dropped. Yeah, we should be seeing yields drop. I mean, with now 5 inflation readings in a row that were cooler ratings, that's a good thing. It's a good thing for yields. Well, I should say, unless you're long yield, unless you're selling bonds, is what I'm trying to say. Natural gas quiet. Oil's pulling back. Let's go look at oil. Gold, silver, softer overnight, taking a breather after the post-CPI rally that was yesterday, as yields in dollar firm. Bitcoin, guys, Bitcoin has just been boring lately. I don't know what you guys think. It's just been going straight sideways now for several weeks. Reduced rate, height expectations, so it is benefiting from that a little bit. And as far as the U.S. indices, see, the futures were modestly higher. Inline CPI supporting the Fed on hold. Remember, that CPI was a good thing for the stock market. What's good for the currency, inflation-wise, is usually the opposite for the stock market. If inflation is not so good for the dollar, it's good for the stock market. That's the only one that's the kind of the outcast, if you will. Middle East situation, still no deal. Iran continues to reject any reopening until the U.S. meets its list of demands. Like I mentioned at the outset of the show, they've got some compensation, sanctions relief, and then ending the blockade demands of their own. And again, the U.S. they're just not going to do it. Not until they agree with the nuclear thing, which it sounds like I don't want to say he's having a change of heart, but President Trump he kind of made it sound in an interview a couple of days ago like he made it sound like he might be open to setting something up and that doesn't focus as much on the nuclear piece, at least right away, but just something to get the main deal settled, and then they'll, I guess, tackle the whole nuclear situation at a later date. Look, the shit's buried under a mountain, so it's not like it's going to hurt anything right now, right? The scientists have been ousted. The leaders have been ousted. Their production facilities have been destroyed. So, yeah, if you look at it from that point of view, that could be something that could wait for a while because they don't even have the ability to get down and get the nuclear dust, as President Trump calls it. The U.S. and China, that's it. That's the only 2 countries that even have the ability to get under that mountain that was caved in on itself after, Operation Midnight Hammer and then the further destruction of the rest of the nuclear sites over the past few months. So it would be nice to get something signed, an actual peace deal signed, guys. Get the geopolitical noise out of our markets as much as possible to where we can get back to the hard data. Shipping traffic through the strait remains extremely low overnight. Saw no major breakthrough. Markets are treating the situation as ongoing stalemate. Okay. All right. So that's that. So again, we did get some yields dropping ever since Tuesday. And the inflation kind of helps on that. Looking at oil. Let's see here. When it comes to oil, so I'm still pretty well neutral on oil from a data standpoint. Yeah, let me go get my list back up over here and get rid of neutral. Let's go add in everything else. There we go. Yeah, so oil, still pretty neutral on that. Still neutral on Bitcoin overall. Gold and silver are definitely at the top of my bullish list, though. Absolutely. Absolutely. Uniswap. What's Uniswap? Hello, the riser. Yeah, let me know. I don't know what Uniswap is. But anyway, as far as gold goes, yeah, here's the thing. And this is, ignore the dots, guys. This is for a separate project I'm doing. But anyway, yeah, it's just basically, here's the thing. If we look at our swing lows and swing highs, we're basically kind of diddling in the middle as we speak. If you look at this swing low, this swing high, imagine a line in the middle. That's the center. That's the retail chop zone, right? Hell, even if you go swing high here to swing low here, that's still in the middle. It's just basic. It's not giving me a discount nor a premium to trade from on a technical level. Even if I had a bearish or bullish bias on this, I still would have no interest in trading oil right now. Not until it does something but other than just hanging out in this middle area. Right? When you get your curve analysis from swing low to swing high, you get three equal sections, guys. 33% times 3. In general, I want to be selling in the top third. That's the premium area. I want to be buying at discount in the lower third. That's the discount area. In the middle, that's where traders come to get chopped to pieces. I do not diddle in the middle. No diddling in the middle, right? So I need to be getting out of that quadrant and going elsewhere. I just don't like this whole zone. Basically, the whole 84 to 76 zone. It's just kind of a disgusting area right now. There's no real trend here. That's why my moving averages also are going sideways if we look at the daily. I have my 8 EMA, which is the red, light red, and then the 21 EMA, which is the light red. So 8 is dark red. I might have said that backwards. 8 is dark red, 21 is light red. And they're basically hugging and making out. So I don't have any real separation. That's the alligator's mouth clamped shut, not pointing to the heavens or pointing towards the fish in the ground, right? Just to give you guys a visual there. I don't like that picture. I just don't like it. The only thing I like about it potentially is the fact that you do have a swing high, swing low. You have a lower high. You have a lower low. And it does kind of appear that it's trying to make another lower high because we did get 2 days worth of rejection wicks there. And the current candle does have a wick as well. So it would not surprise me to see prices drop on oil. I just don't have a fundamental reason to sell it at all. The COT data that we get on Fridays is at this point 9 days old. Okay, we'll get that. We'll get a new copy of the updated commitment of traders numbers tomorrow. That's what the smart money are doing. The big banks, the hedge funds, the pension funds, whatever, teachers funds, all the big money funds, right? The smart money, the whales, right? The last report we have is now, 9 days old. So I'm interested to see what comes out tomorrow after the bell. That way I can kind of reevaluate some of these items on Sunday because that's when the market opens for me here in the U.S. for the currency market. Hi, Andrea. Howdy, howdy, howdy. So that's oil. We looked at gold already. Gold and silver, practically the same thing. I still have a little bit of a better view on gold. Here's why I'm not ready to trade gold yet, though, guys. I still have to get through this overhead supply because that's currently the problem that we face. So I talk about landmines on my show quite a bit, guys, and this is what I'm talking about. Gold and silver are clear at the top of my top setups. They're showing very bullish scoring when it comes to the fundamental sentiment and technical data. But we're running into a landmine. We're bumping into that resistance. And already on the last 3 days, okay, you're seeing those rejection wicks at the top. That's the daily supply and the 4-hour supply. It's just going sideways right now. That's rejecting those zones because of the unfilled order potential that they have. And they clearly have some because it stopped it in its tracks after this big strong move up. So that's gold. Silver, same thing. We're still in this daily supply and 4-hour supply. That's your confluence. That's 2 sets of higher time frame eyeballs looking at the same area. And most of that is going to be, a lot of that's going to be smart money watching that. Because they're not trading on a 5-minute or 15-minute time frame like most retail traders, right? So anyway, gold, silver, I just need a discount or I need these structural breaks and retraces before I can, in good faith, get into a long. Bitcoin is just a snooze fest going sideways. I haven't had any analysis for you guys literally since June 4th, because that's when we dropped into this monthly, weekly, daily demand zone confluences back here. And after we hit this weekly, what have we done? Okay, we've just gone sideways, right? This is our monthly demand. So just straight sideways. This is our weekly demand, straight sideways. Now this at one point was our daily demand inside of both of those. So we had a monthly, weekly, and daily demand zone confluence. That's a very, very potent combination right there. Now, when it hit the monthly, weekly, daily right here, we got a spike up, big spike up. On the retracement, the dailies had already been mitigated, but it still gave us a little bit of a bounce until it finally broke through the daily, right? And the weekly as well. But for stop loss reasons, you're still well within range of a, if somebody were to have bought the weekly demand, and let's just say they're still in it, well, they're still within the range of wherever you would have put your stop loss. But the point is, we're still in the monthly. And when it comes to daily, there's another daily at the bottom of the monthly. So this one is still here to get touched. If we get a drop down to this area, I think we could at least see some type of bounce back to the upside. I'm not saying it's going to bounce back up to $100,000 a coin, but I would expect at least a bounce similar to this, similar to what we saw here, right? So, but again, it's just been going sideways. It's not that I've on purpose ignored Bitcoin for you guys. It's just that there's just been no play. I'm not a sideways trend trader. I'm a trend trader. I need to see moves up or down. If it's sideways, I just got nothing. Okay. But yeah, continue to feel free if you guys just randomly want some more info or something on Bitcoin. Just feel free to shout it out at any time in the future. But that's just the reason I don't proactively go show you guys that much, because it's still being propped up by the monthly and the weekly to a point. Okay. So hope that makes sense on Bitcoin. Let's go to the cash market real quick. Take a look at, let's see, let's go find there we go. S&P. EMAs are pointed to the heavens. This thing's looking pretty good. We've been raking in all-time highs on these indices quite a bit. Yesterday, let's see, we're at, what am I on? Oh, I'm on the wrong time frame. Yeah, so it's obviously kind of been going sideways of late. Guys, when it comes to these indices, they're still pretty well neutral to me. Obviously, the data, the US data that we've seen go backwards has been going backwards for the indices. They've been getting propped up nicely, though, because of a lot of these AI earnings and things that have come out of lately. Artificial intelligence, the Mag 7 earnings, the this, the that. So they've been propped up nicely from that. Again, irrational exuberance. They're not even, the stock market just does not appear to at all be paying attention to the Middle East situation. Now, it did early on for a brief while, but then the stock market just quickly got over it. They're like, screw it, we're gonna keep buying and buying, and that's clearly what's happened. It's kind of stalled over the last week and a half, but at this point, are they overextended? I feel like they might be a little overextended, especially with the weakening U.S. data out there. You get that pop from the earnings and things of that nature, and then I don't know. It's just too expensive for me. Even if I had bullish reasons to buy into these indices, I don't have a technical way to do it. I need retracements. That's S&P, that's the Nasdaq, and then there's your Dow right there. That might not be as far away. The Dow's been the strongest one in my opinion, guys. The S&P got sideways for quite a while there before getting that second pop. Same thing with the Nasdaq, except Nasdaq actually got a big decline. What did Nasdaq drop into? What did it drop into right here? Dropped right into a demand zone. How about that? Basing structure, gap, continued push up. That's where you got your bounce right there, guys. Demand zone here on the Dow. Okay, that's at the end of July, but I had a 4-hour zone drawn up over here, it looks like. It might have even been a little bit smaller of a time frame. Let's see, what did we have over here on this one? Oh yeah, I had a 4-hour demand here drawn up. Look at that. Got a bounce from there. And then we got a subsequent bounce from it again after it went just a little bit deeper, collected some more unfilled orders from this demand zone right here. A lot of volume yellow candles, above average volume with this consolidation leg out. Demand zones, I'm telling you, these things work quite nicely, but it's not something you just want to go out and find every single demand supply zone and buy or sell from immediately. Some of these are retail zones. If it's a retail zone, I don't want any part of it. There's no liquidity to back it up. I need to see something that's institutionally created, meaning it's got leg out volume where my volume is growing, getting bigger as it is moving higher. Effort has got to match result. Quite simple. Okay. So anyway, yeah, that's your indices. I need discounts. I need some data to start turning around, looking good. Now today and yesterday's inflation data have, well, they've been good. They've been okay for the stock market. That's given it just a couple extra points. If we go back to that same U.S. heat map, so we're looking at the currency aisle right here. We're looking at today's PPI data. It's gonna be bullish. Okay. So yeah, just one little piece. It's only 40%, so it's just barely changed. It's not like it's that much of a deal. It's just a tiny bit stronger than the currencies. Again, the inflation is the thing that changes it all. If it's good for the dollar and all these items up here, it's good for the stock market, except for the inflation gauges. That's the only thing that kind of goes the opposite way. You're asking about the carry trade? Let me go dig a little higher up, see what you got, Vince. Trump administration, Fed recently stepping in with that coordinated swap intervention to help Japan protect the yen, specifically using the FEMA, giving them without them having to dump their $1.1 trillion in treasuries. How do you see this impacting broader markets? As someone who mainly trades silver, do you think this massive unwinding of the carry yen trade? Man, the dollar yen was getting quite scary for the Bank of Japan. I don't. Let's go see. Let's go pull that chart up. In fact, so the biggest thing I saw, if I just get rid of my moving averages for a second, let's see. Let's go. Biggest thing I saw. Oh, that's my 1 hour warning. If I'm the Bank of Japan, now that we crossed into 1986 territory back here, this is why I think they did what they did. Because if they're looking at pricing and if they're looking for old liquidity and things of that nature, right here represents our, what was that? Yeah, November of 1986. That's basically where we came up to. Now, up a little higher, this is the past. We're looking at 1986 on a monthly chart. All right. So on the monthly chart, this point right here represented the last, what I see as the last higher time frame supply, meaning orders with gaps, on a smaller time frame, gaps to the downside, that could have possibly knocked down dollar yen if it continued to climb that high. I mean, that's a lot further up. We're talking 174. If we would have gotten past 174, well, there's clearly a waterfall down on this monthly chart where there was really not much supply at all. The price just dropped. Okay? It's a waterfall. A lot of times, but not always, but a lot of times when you get a big waterfall down and you start crossing this little bit of resistance, would-be resistance, a lot of times you'll get another waterfall up. That would have been catastrophic to the 10th power if we would have gotten, I think, if we would have gotten past those lines. So with the Bank of Japan, how many times did they intervene with their currency? Right? Their intervention, or as I call it, their yen-tervention. I don't know, 5, 6, 7, 8 times, almost a dozen times. Intervened with the currency, trying to scoop up as much yen as they can. Well, not as much. A very large amount of yen, which is large to us, but I don't think is very large to the Bank of Japan, to drop dollar yen improve the value of the yen, only for it to be turned around within the next several hours or maybe a few days and get retraced all the way back up to the pre-intervention level. So it's almost like they wasted their money, and they did that several times, and prices continued to skyrocket. Yeah, President Trump and Scott Bessent said that they want to help with the price of yen because it makes things cheaper for us as well. Now, I don't know. I'm not a economist, so I can't really explain the whole reasons around it. But I'm just talking about the technical level. When I look at it on a technical level, that's really where I see the biggest freak out is this waterfall. Because you guys can go to about any asset, any time frame, and whenever you see big waterfalls and we kind of curl back around like we did, okay, we curl all the way back around. Well, oftentimes, whenever we get up to these levels, it'll just waterfall right back up. It happens a lot. So that's just the technical level. But yeah, they've got basically President Trump, from what I heard, he said he wanted to make things cheaper on us too. So it's helping them out. He said, I like Japan. They're a great partner to us. We want to help them out because it inevitably helps us out as well. And a lot of it has to do with the imports and the exports and saving a lot of money on really both sides. So that's the extent of how I can explain it. I'm not the best at explaining that, but that's basically what I got out of their explanations. Scott Bessent, President Trump. They're a great partner. We want to help them out because it inevitably helps us out on our imports and exports and saving money. So that's about the best I could do on that. As far as carry trade goes, I'm just at a stalemate with dollar yen overall. That's about the best way I can put it. I'm at a stalemate. The data itself. Okay, if I pull up the data just on my other channel or my screen over here for dollar yen, let's do this. Let's just do this. Let's go pull up USD. So it's as neutral gets. Now the trend obviously had a big decline because of that 484 pip intervention that we had whenever President Trump and Scott Bessent and Bank of Japan agreed to that mutual yen intervention concept. 484 pip drop, guys. And I think I just had the chart over here so you can see how crazy this thing got. If I didn't throw it away. Yeah, here we go. Look at this. Look at this chart. I think I showed you guys this the other day, but I know some of you are newer on here. When that was announced, 484 pip drop. Keep in mind, this is a 24-hour period of time. 24-hour period. This is a 15-minute chart over 24 hours. These pips are how many pips of a drop or an incline we had in that short period of time. The biggest one was the first one, 484 pips. 188 pips. That was about 2.5 hours. Well, first of all, the 484 pip was in 45 minutes. But then, yeah, 2 hours, 188 pips. These are gigantic moves, guys. Dollar yen only moves about 75 pips a day. Yeah, that's the average true range. So 188 pips up, 133 down, 236 up, 234 down, 200 up, 168 down. So that's more than 3 times the average true range. The volatility got stupid. So did the volume. And it was just absolutely bonkers, bananas. And we're talking about this period of time right in here, right? All these gigantic moves. So it's hard to play that. It's hard to play that. You have to basically increase your stop losses by 3 and or cut your risk by 2/3, right? Just so that you don't completely blow your account, or at least lose a big gigantic chunk of your account, or challenge account if you happen to have a challenge account. So, yeah, I'm just sitting on my hands. I can't make heads or tails of dollar yen right now. Again, when we look at the data itself, trend is all over the place. Seasonality for the month of August. This is my birth month, by the way, guys. Don't forget that. It's at the end of the month. Seasonality for the last 10 years on average has been down for dollar yen. Okay, it's not a guarantee, but just again saying on average, it's down. It's bearish. No help whatsoever from the COT, the smart money. The crowd sentiment's pretty neutral as well. Talking about retail sentiment um, 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 and all that. GDP bearish. MPMI bullish. Retail sales bullish. PPI, PCE, unemployment rate bullish. However, NFP, unemployment claims, ADP jolts bearish. And then you've got a whole bunch of reports on here where we met expectations. SPMI, consumer confidence, CPI, interest rates, and I already mentioned the COT report and the crowd sentiment, all neutral. So it's just hard to make heads or tails. We've got some items beating expectations, some items missing expectations, and quite a few items nailing forecasts right on the dot. So I don't have a clear trend on dollar yen. All we have is the volatility right now from the fact that the Bank of Japan doesn't want prices to go any higher. So they're trying to buy up yen, scoop up yen. And same thing with the dollar. Okay. Probably selling dollars with yen, right? So it's just a very, very volatile situation for dollar yen. Even if I had a bullish or bearish bias on the data, which I don't, it's just one of those items I just want to kind of leave alone, let it do its thing for a while. Now, over the last few days, it has kind of started to balance out somewhat, but still, I have no data. If I'm looking at the charts, I had drawn up the 4-hour supply right here, but it was way too wide of a range, 150 pip range, guys. And remember, the ATR on this thing prior to the intervention was about 70 pips. Currently, it's sitting at 115. So it's almost double the volatility still on average. So it needs to come back down to normal. This ATR box right here needs to come down to here, but we're still clear up here. It's all over the place. Right? Just not interested in it. Not interested in trading this thing. Guys, I gotta get up out of here so I can get to my next project coming up here shortly. Let me just double check, see if I have any last minute thoughts for you over here real quick. So let's see here. What? Oh, I got to get rid of that. I wonder. So yeah, gold, silver, pretty high on my bullish list. I just need some pushes through those overhead resistance points and then retraces. So there's still some work to be done. Pound dollar for currencies is still at the very top of the list. Take one quick look at that. EMAs look good. We did break through supply. So, hey, when it comes to pound dollar, Andrea, I know you're watching. I am still watching this 2-hour zone right here, a little deeper down. That's where I've got my alert. So that'll be a fun point. As always, guys, not financial advice. So keep that in mind, okay? Do your own due diligence with this stuff. I normally have my watermark on. There you go. Not financial advice. Trading is high risk. Okay, you guys know this, but I have to legally say it because I'm not a financial advisor, nor do I give signals, anything like that. I'm going off of 12 and a half years of just grinding and study and probably 20,000, 25,000 hours of chart time at this point. It's just been crazy. I've been eating and sleeping and breathing this stuff since 2014. So, but yeah, pound dollar, that's going to be a spot I'm looking at, that 134 half level. Aussie dollar, still in overhead supply. I still need a big retracement on it. Euro dollar, still have a demand clear at the bottom. It's got a lot of work to do. It's also bouncing into overhead supply. Pound dollar was in overhead supply, but it pierced through it. Okay, so that's why I'm giving this one the time of day now for this higher up the curve zone. Kiwi dollar is still looking at this zone down here as the favorite. For a moment, I was curious about this zone, but I never got a trigger candle, guys. So, c'est la vie. When I don't get a bullish engulfing candle in the zone, or a hammer candle, or something with a wick underneath and volume, just let it pass through. Never got the volume bouncing in, so that told me to stay out of this. Okay, stayed safe, didn't lose any money. So now the next step for Kiwi dollar is this main zone I was interested in from the start, all the way down here. Okay, at more of that 57, 58 area. Dollar CAD, still looking at this supply right here. A little bit of a flip zone because we did have an old daily zone right here that finally got pierced through. That's likely going to be, in my opinion, the source of the power. So still waiting on a retracement there. Got my alert set. Dollar Swiss still kind of sideways overall. The EMAs, okay, so it's starting to poke its little head up. The dark red line, okay, the alligator's mouth opening to the upside. So it's starting to look good if you're a buyer, because we are still technically in an uptrend. However, the data for dollar Swiss, last I checked, yeah, is pointing down. So the Swiss is heavily favored right now over the dollar because of the data, the way the data shakes out. Seasonality bearish, crowd sentiment bearish, GDP, SPMI, consumer confidence, NFP, unemployment claims, ADP, and JOLTS numbers all were bad for the dollar and favor the Swiss more, guys. There's really only two items giving us a bullish bias, and that's unemployment rate, PPI, and retail sales. To me, that's not near enough to be trying to go long this, and everything else is pointing bearish for the dollar and favorable for the Swissy. However, the challenge we face, like I've said the last few days, is we still have these higher low structures that we have not broken yet. We are still technically in that uptrend because we've got higher high, higher high, higher high to go along with the higher low, higher low, higher low. So I need to see this yellow line come into fruition at some point. Just need to see some of these structures get broken to the downside, right? That way we can get a retracement to a newly formed supply zone. I have some zones up here, but first step is first. Break these white lines. That's the first step, guys, for the way I trade. Because I don't want to try stopping a rocket ship. It's the same thing in reverse if price is going down and we're trying to catch a falling knife, right? We don't want to do that. So be careful with that. Structural breaks, supply demand zone breaks are everything when it comes to finding the source of the power that created that. It takes a lot of money to break those structures and zones. So when that happens, we want to find that underlying strength. Right now, the underlying strength is to the upside, not the downside. So until it turns around, I am out. That is your majors, ladies and gents. And with that, I think that's about it. Yeah, gold. I did go over gold. I just arrived, but I think gold may fall and retrace, especially. Yeah, if gold falls, that's what I want to see. I'll finish it on gold real quick since I know I went through it. But here's the problem with gold. Yeah, I need a decline. We are bounced into this overhead supply, so that is a good sign. Okay, perhaps that can be the linchpin to push price down to our discounted areas. And for me, I'm watching that 4167 area. That is the strongest zone that I saw with volume. If it drops any further, we start bouncing into that daily demand all the way at the bottom. I just don't like the volume picture down here on a smaller chart, on a 4-hour inside of the daily. So for me, it's that 4167 or bust. Also a former resistance point, possible support right at that demand zone. There's a lot of things I like about this zone down here. I'm just going to delete. Let's see here. Yeah, I'm just going to get rid of this, clean this up a little bit. But yeah, this is what I want to see right here. This exact picture is what I want to see. Lower lows and highs going into the zone. And then all of a sudden you get a break of structure to the upside. It's breaking this swing high. Okay. Broken structure or change of character, as it's more accurately called. But I still need a retracement to a newly created demand zone on that new impulse leg. That would become my new bullish impulse leg because it broke this structure, right? So impulse leg, find the source of the impulse leg. It's typically going to be a newer, smaller time frame demand zone because now we're fine tuning it. And that's the buy right there, guys, okay? So if you learned one thing today, learn that pattern, because that is your confirmation entry after bouncing into a zone, okay? Bullish impulse leg because it broke the structure. It broke a lower high and turned into a higher high, right? That's 50% of our question answered. The other 50% is, hey, do I have a newly created demand zone in this newly created impulse leg where there's some unfilled order potential, because it takes money Takes a lot of money to break a structure. So we have to find the source of that power that broke that structure. And then that right there, ladies and gents, is where I buy every time after I get a bullish engulfing candle on a smaller time frame or a candle with a wick underneath. And then also my volume, my VSA activity at the bottom, confirming that the smart money are actually stepping in to give us a lift up. Okay, so that is my play on gold. Hope that helps, guys. Guys, have a wonderful day out there. We'll be back tomorrow for Friday, and we'll do it all over again. We'll finish out the week strong before we go and relax.